My name is Chimgozirim Nwokoma, and word on the street is that I'm a senior reporter at Techpoint Africa. This afternoon, we are going to be having a panel session, how to build a fintech startup. Munachi has touched on some of the things that you need when you're building a fintech startup. And joining me would be, Munachi is here already, but we also have Yvonne-Faith, Elaigwu. She would be joining me. Yvonne, can you come up? And Adeyemi, Adegbayi. So, yep. All right, so this is a very balanced panel. We have one founder, we have a seasoned operator, and we have one investor. And the audience is also very balanced. I think there's a healthy composition of male and females in the audience. So this is probably the best place to be at the event. So first question. Okay, I think we should start out introducing ourselves. Yvonne, can you go first?
Okay. Hi, everyone. My name is Yvonne-Faith Elaigwu. I head operations at a company called OnePipe. We are an embedded finance provider. We make it possible companies to provide banking services to their customers.
All right, thank you.
Hi, everyone. Good afternoon. My name is Adegbayi. I work as an investment professional at TLcom Capital. TLcom is an early to growth stage VC fund focused on Africa. I think we're one of the largest funds in continent, and we've been investing on the continent over the past decade.
Okay, thank you. So you may be wondering, why are we talking about building a fintech startup? Last year, African startups raised about $5 billion, depending on who you ask, and about $2 billion of that went to fintech startups alone. What that shows you is that there's investor interest. There are a lot of people as well who are building. And I think that trend has carried on to this year. I think for every week, there's at least one fintech startup that is announcing a raise. I mean, there have been dry patches, but what you would have probably seen in the news is that there's like a crunch in the VC market, and a lot of the investors that I speak to also say, yes, that's the reality. But funny enough, you probably will get maybe 100 fintech startups that raise money in a year. And I think earlier, Yinka mentioned that just in Nigeria alone, we have over 200 fintech startups. So how do you think the other 100 plus get the money that they need, get the resources, whatever resources, financial, emotional, if there's anything like that, just how do they get the other resources that they use to build their startup? So that's what we are going to be covering today. So my first question is going to be, I'll direct it to Yemi. Why should anyone be thinking of building a startup, a fintech startup in 2022 or in 2023 if you have plans for that?
I think the simple answer is because there are still problems to be solved. And the way I see Africa is, when you look at the VC landscape globally, I think we are babies. There has been VC in Africa at scale for probably 6 years. And then it's still to a point where, even from an investment perspective, we have early stage investors, we have investors at the bridge, there's no one at the growth stage. And then there are a lot of problems. There's a lot of fintech activity in Nigeria. Nigeria is one of 54 countries. When you look at the rest of the continent, there are probably 4 or 5 markets where there's still a lot or some fintech activity. Most of the continent is still very barren land. Interesting statistics I've heard over the past couple of months, years. First, the 2 most underbanked countries in the world, I think, are Morocco and Egypt, both African countries. Egypt is top 3 in terms of size of population in Africa, and also in terms of per capita income, so how much people actually have to spend. But then there are very few people that actually have functional bank accounts. That's a big fintech problem. And there are a lot of countries that don't even have infrastructure. I think in Nigeria, though we don't often like what we have from a regulatory perspective, there are certain things that we've enjoyed which make it easy to build, such as the presence of a switch, which means you plug in and then you can do things as simple as transfers, which don't exist in a lot of markets. And then also we have a central bank that has certain licenses that people can get to move from 0 to 1, it might come at a cost. You might have to partner with people. But interesting statistic also in Morocco, I think there are 6 banks. There hasn't been a new banking license issued I think it's in over 6 years. There's not 6 banks. So they haven't issued a banking license in over 6 years. And then there's no clarity as to how people can get new banking licenses. So everyone essentially has to go around this. And these are just 2 use cases. And then in every market, there are problems like this. And this is just around payments. When you go deeper, there are more problems. There's things like super low insurance penetration for different reasons, which I would not jump into now. But essentially, there are a lot of problems across different financial services verticals across the continent, which means people still need to keep building. And that's why investors are here.
All right, so basically there's a lot of opportunity, and so people need to keep building. Yvonne, do you have anything to add?
No, so I was going to say that, and I think he just spoke about it a lot more, around the fact that there's still a lot of problem. Like if you get the opportunity to travel to other parts of the world and you see how the solutions are being built, like things just work in certain ways, and you come back home and you see that there's just so much that needs to be done, that technology can be used, leveraged to build or even improve. And so that is one good reason to, still build a fintech startup.
All right. So when you decide to build a fintech startup or any startup at all, there are a lot of moving parts. So you need to secure the funds that you need to launch the startup, pay your employees. You also need to hire people. And God help you if you've never hired anyone, you have to figure it out on the spot. You also need to, if you're building a startup, you most likely have to interface with regulators. And he just mentioned that Nigeria has it easy in a way, but it's still very difficult. I mean, you could wake up one morning and realize that you just can't trade crypto.
Yeah.
So those are a lot of things that founders have to consider when they are building their startup. So let's start with funding. Munachi mentioned liquidity earlier in your presentation. So first, how can founders make sure that they have the funding? Because funding is important. It's basically the oil that makes sure your engine is working. Without it, you can't even pay salaries. You can't you can't even do marketing properly if you don't have money. So how can founders secure the funding that they need?
Okay, for me, I just feel like the first thing you need to do as a founder is you need to ensure that you have a business. And you shouldn't consider your startup a startup if it doesn't have a business. You should be able to create value and retain value. The problem is a lot of us want to build nice ideas, and it's nice. I want to build a lot of nice ideas, but if it's fundamentally not a business, there's no business with you building that business. So I think if you don't have a business that actually can create value, you should first of all forget about funding, because you're just building your hobby. And the thing about hobbies is you self-funded. You have to fund it yourself, And once you have that figured out, you have a business that is actually creating value, you can now proceed to an investor or a bank, or you can take a loan, And I tell people that equity is the most expensive form of funding. If you are sure of yourself, if it's sure for you, let me put it like that, go and take a loan from the bank, because then it is sure for you. But if it's not sure for you and you want people to divest that risk with you, then you go for funding. Then you are selling a part of the business, And that is why you see people like big corporations, when they want to raise capital, they do debt funding because they know they have the numbers, they have the will, they know they can do it. And really, who can really fund some of these companies? I think people like Amazon, they want to roll out projects. They are taking loans from the bank. You understand? So funding, you should think about funding as you being able to build a business that works. After you build a business that works, then you can now look at whether you want to sell equity or you want to sell debt. So those are the 2 things that you need to think about. If you think about equity, you know that you want to divest that risk to other people. But if it's sure for you, then you go and take a loan and you run a business. So that's what I think.
Okay, thank you. Yvonne, so you're an experienced operational hand, and you've probably done some hiring in the past. you've done some hiring, right? Yeah. Okay. How can founders ensure that they're hiring the best hands, even when they can't necessarily pay industry standard wages?
Yeah. Okay. So one of the ways that founders can do this is to find people who are interested, who they can sell the vision of what they are building to. I think that a great place to start is with selling the vision, the business. Like he said, like you have something and you believe that this thing is solving a problem and there's a market out there for it. Get a few people who are willing to work with you. And these people can be different types. They can be people who are really fresh out of school with a heart to learn and grow and serve, or people who have been there, done it, that are now interested in meaningful work. But find yourself people who are not chasing the next fast dollar, because you just keep getting them and they'll be poaching them. Like there'll always be that person that can pay more than you. So I think that especially at the management level, people working closest with you, it's important to find people that are able to key into the vision, who are ready to, in the words of my boss, die there with you in that company. So that is one way to start. Yeah, find people who will work with you.
Okay, interesting answer. Find people who will die there with you. And you probably know that over 100,000 tech workers have been laid off just this year. And Nigeria hasn't been left out. And we also have rising inflation. You have rising insecurity. So people want something that makes them stay. And a vision is nice, but at times, your vision cannot feed you, and your vision cannot keep you safe. How can Nigerian founders, now let's be specific with Nigerian founders, how can Nigerian founders help their employees, or especially when we consider that a lot of founders are like very, very young. They don't have they're not so intuitive to know that, okay, this guy is so good, he can stay. So how can that founder who is so young and is building a business, like Munachi said, how can he ensure that he's also hiring people who are of the same mind?
Yeah, I think that founders are doing it somewhat today. The concept of employee stock options is quite popular in the Nigerian fintech market. Almost every startup offers you stock options. I also know that they are also finding interesting ways to keep their employees satisfied, to make sure that they don't go hungry. I know that some startups do things like trading a physical space, like the cost of getting a physical space, exchanging that for a remote work environment where you kind of monetize, like provide things like workstations, things that will make work life a lot easier. I know of organizations that, go above and beyond to provide some little things that just make you feel like we are together. Then, but I think one of the more compelling ones is the stock option thing that just lets you know that if we do this well, there's a chance that we'll all do well at the end of the day. Yeah.
Okay. So, Adeyemi.
Sorry. Can I just add to that? It's not so much about stock options. A business needs to work. If you're giving me stock options to a business that is going nowhere, a stock option is what not. You understand? So it's very important, like I said, that a startup is making money. No matter what happens, like in marriage. If there's no money coming in, no matter of love can keep you will be unhappy, you understand? So you need to be able to make money as a business. And it's very, 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 it has to be the bottom line. Then another thing is, whatever you're building, make sure you find purpose in it. It should make you happy. You can't be rich every day, and you can't be rich instantly. When we started Yellow Card, I remember I had to do a lot of things. Really, the company didn't have money then, you understand? But I believed in the space, and I believed in the vision, you understand? And we're making little progress, and we're growing, and that progress was sparking me to want to do more, because I believe that the company will be where it is today, you understand? So the purpose is very important, and I tell people, I tell founders that you are selling to 3 different sets of people. You are selling to your investors, you are selling to your staffs, and you're selling to your customers. You understand? As a founder, you need to ensure that these 3 people are buying what you're selling. If not, business will fail. So.
Yeah. I'm sorry, I don't know if something in my response maybe made it come across that you're not paying your people. I mean, it's very fundamental. All I'm saying is that you cannot, at the early stage, which is what we're talking about, you can't be competing with Amazon and Facebook and maybe even, I don't know, maybe the pay stacks of, maybe even OneLiquidity of this world. Exactly. So I'm not saying that you're not paying your employees, but the person that is working closely with you at that level is not there just because you can pay him $2,000, because somebody will offer him $3,000, somebody will offer him $10,000. Yeah. That cannot be the major reason. Yeah, and then another way, I was speaking about this with one of my colleagues, and it was like, one of the things that some startups also do is like build an employee, like a pipeline, where you have young people that you're growing and feeding into your, payroll system periodically, growing them. Like, don't be afraid that they will leave. There's also the thinking that, why do I invest this much in training people and then they might leave? But then that's another way to get like good people into your system. Yeah.
Okay. So a few weeks ago, I was at an event and one of the panelists was asked about his thoughts on collaboration among Nigerian businesses. And he gave a very interesting example. He used the example of Gala and Lacasera. So Gala and Lacasera they're like 5 and 6 basically. If you're in traffic in Lagos and you get this, you're definitely getting the other one. So he asked the question, why did Gala and Lacasera never collaborate until Biggie came in and took away both their market shares? It's not like he took away Lacasera's market share, he took away everybody's market share. So he asked a very important question, why are Nigerian startups or Nigerian companies not doing enough collaboration? Adeyemi, over to you.
So first, on Ghana and Lacasera, I think the reason they're not together anymore is quality, rather than them not being a marriage that worked. On collaboration, I wouldn't say Nigerian startups are not doing enough collaboration, because I speak with startups daily. Everyone is partnering with someone. There are very few startups I've ever spoken with who are working in isolation. Like, they're all plugged in. And something I learned very recently from someone who basically does a lot of partnerships in Africa is, there's the first part, which is I'm connected with person A, which often seems like the biggest hurdle, but it's one of the easiest parts. So I've integrated with person A for this reason. I've integrated with person B for this reason. Step 1, great. Now we talk to each other. For example, if person B's role is selling my product, there needs to be enough reasons for person B to push my product. And it sounds very simple. You see a lot of decks with a lot of logos on them saying we're partnering with these 10 people, but then those people are not affecting the bottom line. Your revenues are not growing, but you're integrating every day. Why? Or they're not growing at the pace we expect it to. It's because you don't have the symbiotic relationships that you need for this. If I was company X, I'm going to avoid naming companies, and I have 100 or 1,000 companies integrated into me, and I have a requirement, or you need me to push this product, I can push only so many products to my users. I will prioritize people that I see value in. You could just end up being a random product in a marketplace somewhere where I put no resources to, but then I've given you the first thing, which is you're available here. So I think we need to take 2 steps back and then reassess what we think about partnerships, because a partnership works on paper, doesn't mean it works in reality. But then I would say founders actually done a really great job collaborating. Like, I've seen so many innovative ways that even companies that in my wildest dreams I didn't see working together have found a way to work together. So essentially utilizing resources, founders who have spare capital in place, using it as leverage to help people that need that. In a market where there's such little debt, people finding innovative ways to work with each other to get debt at more competitive rates, because the rates you get anywhere else is ridiculous.
Okay, thank you. Yvonne, how can startups ensure that partnerships work for them? Just like Adeyemi pointed out, the fact that we signed a deal and appeared on Techpoint doesn't mean your partnership would work.
Yeah.
How can we ensure that the work? And especially, I would like you to talk on how can you get executive buy-in, because I believe that's what will drive. So if the executives do not believe in it, they could just agree and they'll sign the partnership, but nothing would ever happen. So how can we make sure that partnerships work?
Okay. Yeah, just before I answer that, I feel like, I don't know where you're seeing your founders that are working, partnering very well together. I think that a lot of the partnerships are actually in paper, one. I also think that a lot of the time, people are in a hurry. Like, they're happy to say that we're partnering if it's like a big, like it's almost no more a startup. Like, I would say I'm partnering with X company. It might help my fundraising. It might make me look more, it might give validity to my product in the market. But when it really boils down to it, I think I have seen more of, especially in the tech space, people wanting to do it all by themselves. Like, they have built some solution that says, you don't need to do all the work here. You can just come and plug in and do X, Y, Z. There's very high chances that 50 startups will wake up tomorrow and they want to do it and they want to build, like, is it not tech? I will build it. I have seen scenarios where this is your business, like the actual thing that you're selling is around A. But because you have a CTO and you're a tech company, you want to build this part of it and that part of it and the infrastructure and like everything that at the end of the day sometimes does not help you be efficient and effective. You want to say something?
Yeah, can I key in really fast? I think what you said is valid sometimes, but then there's a big founder maturity part to that and startup maturity, because beyond the cost of, for example, plugging into someone and using them, there's a money cost, there's a time cost. If I'm just trying to do a test, which is what you start with before you blow out any product, it doesn't make a lot of sense to say, rather than plug into someone that exists to do this test, I'm just going to be... And
I know.
I obviously haven't interacted with all the startups you've interacted with, and I'm not saying everyone collaborates on everything, but I'm just saying I've seen a lot of innovative ways where people collaborate. And this could be as a result of who's in their network, or it could be as a result of what they find as the most important thing for them. Yeah. Some people want to own some IP internally because because if you kind of, and this is not saying don't collaborate, please, but if you collaborate on everything and then you really don't have any struck tech base, then you have no IP to protect, defend, and or sell. Because in exit situations, IP sometimes has a lot of strength. So someone could say, you know what, I'm going to build my IP instead.
And we see a lot of that, but okay. So to answer the question, how, I think that he had started to answer it, and it's in everybody having like a symbiotic relationship. What I find is that a lot of times when you are like a startup, you're hungry. You really need to work with company A to maybe validate your product or something. You are ready to do more of the giving. Like, you're not in a strong position to say, let's have this partnership where you give me A and I give you Y. And like that type of, those conversations are not had at that beginning, because really all you need is to hit the ground running, anything to start. So I don't know. I think that maybe a bit more of strategic thinking in the minds of the founders when they are going into these things. Like you were saying, if it is sure for you, and you know that this thing is going to be a thing, there's a business here, there's a market here, dear company A, as we work together, I'll give you this and we'll do, like, at that level, there will be those kind of conversations. And they don't have to be, we don't start until you give me this. It can be, let's do this, let's get into this partnership, let's come back in a year, or let's look at what value looks like, transaction count, volume. If we hit this milestone, maybe then you begin to give me this and I begin to give you that. And that way you have skin in the game. Like, once everybody is now beginning to see that, oh, there is value in this thing, then it'll begin to make more sense. Yeah.
All right. Munachi, do you want to add anything?
I just want to add that in Nigeria, we are notorious with keeping ideas to themselves. You know, if you go abroad and you are in a typical setting where investors are, this guy will be like, hey, what do you do? I do this. I say, oh, wow, I know a guy that do this. Why don't you partner? Like, they are willing to introduce you. In Nigeria, everybody wants to be a middleman and make something from you. And that is the biggest problem you will face, you know. There's a lot of, because of, we want, and to be honest, it's how we grew up, you know. We're always thinking of third hustle.
Thing is, the person I was talking about, he said something similar, that you grow up and your parents tell you, you came second. The person that came first, does he have two heads?
Two heads, exactly.
So we grew up being very competitive.
Exactly.
And it plays out in the workplace.
And it's quite difficult because if you are in any other market, everybody wants to help you. What are you doing? Amazing. I know a guy that does A, B, C, D. I know a regulator that does. In Nigeria, everybody wants to be in the middle and ensure that they are making something. And that is the biggest problem you will face. So as a startup, man, you just need someone, and you really need someone that will believe in you. You know, you really need a partner, a company that will work with you without strangling you. You understand? And that is where you would find the most opportunity, you know. And you need to also keep coming to conversations like this, meeting people. Don't be shy. If you ever fly business class, make sure you walk around and shake everybody. This is what I do. I'm serious, because all these little things help. You wouldn't know, but
fly coach and walk to business class and shake people.
That's why there's business class. You understand? So you need to constantly leverage yourself, talk to people, because at the end of the day, nobody will help you. It's you that will help yourself, you know. And partnerships should be about value. First of all, two businesses need to create more value, and the two businesses need to retain value for each other. You understand? It can't be a parasitic relationship and you expect it to work. You understand? So always think about, okay, I'm coming to partner with this company. What am I bringing to the table? Am I giving them volume? Am I giving them customers? What am I keeping? And make these things clear from the start. Because I assure you, the moment you get big, we all know this with banks. You can be doing something with a bank today. Tomorrow, once it's big, you say, I don't need you anymore. I'll do it myself. And that is one of the biggest things in Nigeria. That greed is so entrenched into our souls in Africa that it's almost very hard to wash it out. You understand? So you need to work with people that you trust and talk to the right set of people, because collaboration in Africa, man, is extreme sport. You know, and you just need to be very careful about it. If you know that this person is not an ethical person, there are a lot of unethical businesses. They are too aggressive. They will be so aggressive. They will partner with you, then they will take everything away from you. We have had startups where they will introduce you to account officers. Then they will tell the account officers to send them your bank account statement. So they see your clients. So they will go to their client. They think you're your friends. They're not really your friends. As the market gets tougher, people get more aggressive. So working with an ethical company that is not going to steal your customers is the most important thing in partnership. And all this should also be set out in writing. So it's very important that you actually understand, you underwrite the terms of any partnership or collaboration.
Okay, thank you. I think that was very, very, very important. Ensure that you're making, or that you're getting into business with honest people. I don't know if you read the Bible, Jacob and Laban, there you think you're doing business with someone that has your best interest, and then he just wants to put the rug off you. So I think we are almost running out of time, if we've not run out of time. And some of us want to go home and watch the World Cup. But we are going to take some questions. So if you have questions, you can indicate 1, 2, 3, 4. So I think that's all we can take for now.
Okay. So, number 1.
Good afternoon, everyone. My name is Tunde Akindemo. I have a couple of questions. From the title of this panel, it says, building a fintech with limited resources. My first question is, in today's, let me say, tech space, what is limited resources? That's one. Secondly, a lot of people probably here might not want to go into fintech, but tech startup generally. What is your background? Do you need to come from a technical background to start a tech startup? I mean, if you are not coming from there, because looking at the situation in Africa, a lot of these things or startups that you are trying to start, they have no basis anywhere. You are entirely creating something new. Even talking to a developer, he might not be able to grasp the concept of what you are trying to do. You understand? Now, the panelist in the nice white jacket, he said something. Sorry, I forgot your name. But he said something that in Nigeria, you have to be wary of people you collaborate with because they might want to push you out. You know, there are two contradicting arguments here. One says collaborate with people. One says be wary of people. But considering your experience, because from what I've heard, you have succeeded with at least 2 startups. How have you been able to navigate those waters? Thank you.
Okay, so for subsequent questions, let's keep it to just one question.
Okay, first things first. Every startup has limited resources, so don't think about it times. Even Elon Musk is looking for money. Don't think about it. So, limited resources means that you can't have everything. If you have everything, why are you building a startup? Just go and enjoy yourself. So by limited resources, it could mean not just capital. It could mean technology resources. It could mean engineering talent. It could mean hiring talent. It could mean market. So resources are anything that you use to increase productivity or increase product. You understand? So in the world we find today, the world we are today, all of us are limited in one way or the other. You understand? The way we navigate that is the most important thing. You understand? And the way you navigate that is not just a incremental function. It's also about how innovative you are, and that is the role of technology to scale. So when your investors come and ask you, is your business scaling? It does not mean that if you put A, you are getting B. It means that if you put A, you are getting A plus A times 2. You understand? You need to be able to amplify and exponentially grow what you are doing in a way that is sustainable. And that's why tech startups generally have larger valuations, because with writing one line of code, you can serve 10 million customers. You understand? That's scaling. Now, about so much money, would Zenith Bank want to take that value from? Sorry for calling names, but I'm just using that. Please, you understand? Would they want to take away that value from me? You understand? So, knowing the people you work with and understanding what they have to gain will be the first step to doing it. And at the end of the day, everything is in the hands of God, man. No relationship, nobody that cannot change. You understand? You just need to be very careful and have your terms written in ink. You understand? I also have the measures that you take. You understand? You are not supposed to do this, this, and this. And just to add to that, there are many times that I've seen a lot of startups, and this is very, very important for people that collect capital, especially, for instance, if you think about a Coinbase investing in a local exchange. You need to understand why they are investing in your exchange. Some of these businesses, they will invest in you and still come and compete with you. I've had that experience clear. You understand? And it happened, you'd be forced to even return their money back, because what's the point? You invest in me, you collect all my data, you collect all my customers' data, then you go into the same market with me. What's the point of investing in me anymore? You understand? And that is one of the biggest challenges you are going to face as a small guy. You understand? So you need to also hold your ground and set your terms, and only work with people that are willing to grow with you and willing to invest, not just capital, but invest in you as a person and as a business.
Okay, so we have a second. I think there was someone in front here, right? Okay, so we'll come to you. So let's start from people closer.
Okay, thank you. Good afternoon, everyone. My name is Bolaji Okwade, and I'm from Cadre Solutions. Yes, my question will be quite directed to the OneLiquidity CEO. From experience, actually, I don't reside in Lagos. I'm from Osun State, and I drove down here this morning, actually, to solve one problem. We are building a fintech solution. Myself and the other co-founder we have a tech background. Although in recent times, I've shifted my own ground to focusing more on the product, and along the line, I have to learn a whole lot of things that relates to the fintech space and FX and the like of it. So yes, we needed. Let me say, we felt we need to have a co-founder that has domain expertise in what we are trying to do. But I must say that has proven quite difficult to, so I want you to quite shed some light on how to, however, not that we haven't discussed with one or two persons, but we are able to, deduce some things at the starting, point that we could or could not be able to work with people like that, because it's not a kind of management or an employee issue. It's a co-founding stuff. So thank you.
I think you should use this opportunity to share what you're doing as well. So everybody.
All right, good. We are trying to, we are trying to build a marketplace. We are trying to digitize Bureau de change in Africa. We want people to, we are trying to build a layer whereby you would not necessarily need to be an Hausa Malam, to hold currencies, multiple currencies, and exchange it. However, we want to make it also easier for people to, to pay anyone around the globe. However, making it very simple for users, to receive funds from anywhere. But beyond that, the marketplace technology is what we are trying to, put in place very properly. Thank you.
So, thank you. That's a great business you're building. I think there's a lot of market for it. But one thing you'd first realize is technology is going to be 10% of your problem. You would quickly realize that because there's so much technology out there. You understand? The most important thing, and I tell people, is do you have a business? Technology is an enabler. It is not a business. You understand? It is never a business. There's no business that is called technology. You understand? When you build a business, then you use technology to package it and redistribute it. So having, and you don't even need necessarily, there's nobody that has monopoly of knowledge. You need to understand intrinsically what you are building. And when I mean understand what you are building, it's not just about understanding you are building Bureau de change. You have to understand the supply chain. How money will move from point A, enter point B, move out from point B to enter point C, where I'm going to make my money. Okay, you understand? When you understand that, then you need somebody that knows how to take that product to market. You understand? The channel you use to take it to market is as important as the product itself. There are certain products that would never work if you just do them on Google Ads. Like, you would hardly ever use a bank that you just see on Cartoon Network. You feel like, why will I bank with people here? You understand? The channel you use to distribute your product, the first set of customers that you have are the people that are going to define your product for you. Because at the end of the day, you don't even really know what you're building. When you really know what you're building is when you have built that business and you start making money. Then you understand where the money is coming from. You need to first think, one, the product, two, the channels that you're delivering that value to, and the customers that are the first set of customers that are bringing that revenue, because with them, you now define what your product is. When we started OneLiquidity, we were trying to do 1, 2, 3, 4, 5 things. But one day, I just like, these other things are not even bringing money to, and they're just stressing me. You understand? So understanding what is giving you money, expanding on that, that is the most important thing. And the channel you use to deliver it, who are your first set of customers, will be the most important thing that you all should think about. You understand? So if you want to do that, have you spoken to any Bureau de change guy? Has he used your platform for a week? Has he called you and told you, this your platform has changed my business, has changed my life, it's making me more money? Remember, they already have a process that works. If for them to come and meet you, that means, or for them to be happy with your product, you need to give them what they already have plus B. If you're not making incremental value, why are you stressing me? You understand? So you should also think about it. I think the other guys also have.
Let me just share a bit. I know the primary part of the question was around trying to find a co-founder with technical expertise. You don't need, with technical expertise, like not a technical founder, domain expertise here. So I think the first thing is, whoever this person is doesn't have to be a co-founder. So there are solo founders who build a co-founding team who have incentive but are not founders. So it could be one of your first 5 people. It's someone that you see that is strong. You give substantial incentive to stay with you from 0 to 1. Because I think your biggest problem is not, can I find someone? It's, can I find someone that will work with me and be with me till I can afford to potentially replace the person with someone that is stronger than that person is in that field. And even we found out, like, look, once you get to a Series C, there's a good chance that everything you know about your business becomes less relevant, and there are people that are stronger than you around the table at everything. So it's find people that can work with you first. They don't have to be co-founders. Be careful who becomes a co-founder. It's very important that you are getting into a 10-year relationship most times with your co-founders. If you don't know someone that you're sure you and your other founder can work well with, then you can try to find people. And if you can't even afford to pay them as employees, you can find people that you can get advisory agreements with. There are lots of people. You probably have to go out of your comfort zone. For me, I would say if I was to do this, I'll probably search within my network, find first or second level contacts. If you can't do that with your network, and not everyone has that strength of network, you might have to go out of it. But then you might lose money now, not lose, but like you have to sacrifice money now for that, or find someone and get the person to give you a fraction of their time if you can't afford them full time till you can.
Yeah, I also just want to add a little to say that you say you're 2 technical founders already, and you're looking for, maybe you want to break down what domain expertise is for your business. Is it someone that understands international payments? Is it someone that understands the compliance around how you move money within countries, movement of money in, movement of money out? Do you get? So maybe one of the things you need to do is break down what domain expertise means for you, and then begin to find people. Like he said, they can be advisory roles, they can be some employee, really doesn't have to be a co-founder.
Just to add, though, there are a lot of businesses that can help you do a lot of that heavy lifting, like us, but you need to be able to know that your focus as your business is to get customers. You understand? If there's no money flowing in, the person that is helping you get tired too. So, yeah.
You know, we have access to several currencies already. That as you sit here, I can if you want to pay someone in China, I can arrange that very quickly. So I think it's just fair. Like what would happen if we get to market and we don't have this backing of someone that has already been, doing it. But you've given me several, options to, that we can still go ahead and, get some people around, whether by paying them or advisory roles and the like. Thank you so much. I appreciate it.
All right. So that's 4,000 naira well spent then. So we have someone at the back.
Hi, Adeyemi. So I was going to ask, how many deals is TLcom going to be doing this quarter? And how do you think that affects the economy at large in the coming year, actually?
I cannot answer the how many deals are you going to do this quarter.
But I have one more question. I have one more question. Munachi, I was going to ask, how did you raise liquidity originally? I thought you tried to address that, but like the first, why you were starting the business originally, how did you raise?
For OneLiquidity?
Yes, for OneLiquidity. And is the integration of your APIs, is it the same thing as your business model? Because you mentioned about if you have to integrate 30 APIs, like that is the headache that you try to solve for other people. So is integrating that 30 APIs, is that the business model in itself?
Okay, that's a good question. So how do we raise the money? It's God, though. Let's start from there. But one thing you would quickly notice, and our investors will also tell you, is that social capital is more than financial capital. If people know you, people trust you, people will give you money. Elon Musk raised how much? If you want to go and buy, they will never answer you like, you're never serious. Trust, building a brand, and the more businesses that you have built that succeed give you leverage to build others. You understand? I think for us for me at OneLiquidity, one thing is we have been I don't want to say OG, but we have been in the space for a while. A lot of the people that know us are the people that have been here a while too. So we have interacted with a lot of people, and we have been able to integrate directly into not just local partners, a lot of international partners. And these people want to build in Africa, but they don't want the exposure or they don't know how to enter. And so in the West, collaboration is how they thrive. They are ready to take a small bit, just a tiny bit, and ensuring that value is flowing, you understand? And working with those people has really helped us to build out the base And we are still building out. We are still trying to raise capital and stuff, more capital, because obviously, the more we build, the more demand we will have. So we have spent a lot of time in that process, you understand? But it's process that helped a lot with being successful in one or two other businesses and taking that leverage and telling them, look, we have done A, we have done B, we have made this, we have made C. If you give us D, we'll give you E. You understand? And make sure when these conversations you're having you're coming from a place of strength. To be honest, VCs are the most aggressive people. And one thing you should realize is that these people don't really have money. They don't really have that much money. When you actually come down to it, they are not that rich. You probably make more money than they would. So they too are looking for opportunities. They're even looking for opportunities more than you because they are risk failure. They will probably invest in 10 and maybe only one will succeed. So they are trying to optimize those odds. You understand? So don't always depend on getting VC money. Depend on your ability to make money for yourself, build a sustainable business. And trust me, if you take a sustainable business to any VC, he will be the one begging you that when are you taking my money? And you set the tone, and you want to set the tone. That's the most important thing. Or am I lying?
So I will address what you said earlier, but let me start by answering the first question. So in terms of how many more deals would we make this year, I can't give you an answer to that because we don't enter the year saying we're going to close this year with 5 deals or with 10. We have dry powder. We are fundraising our fund 2 with target size of 150 million. We have done first close and we've started investing from it. We've done 3 deals this year, 2 of which were Series A's that we led. So we're still actively looking at deals and making these deals. So it's a case-by-case basis, essentially. Then to what you've said, I think first, there are certain things that we need to understand. First, there are some businesses that are VC businesses, and there are businesses that are not VC businesses. VCs know what they're looking for when they invest in businesses. Your business can get to certain metrics, and then some VCs would flood in because of that, but then that's not a VC standard. So there are VCs that would flood in irrespective of where your business is at. And then there was a comment earlier about debt and equity and then what debt can do, what equity can do. As a founder, you need to understand these 2 instruments have very different things that they can do. And it's understanding the role of debt and I'll take great equity because great equity is more than just capital. Debt most times is debt, but then equity comes with extra. So let me just call out TLcom here. So for example, if TLcom was to invest in any business, you would get one of the partners who's going to be on your board because we're not going to invest in a business and not ask you to create a board at some point. The board might not be today, but whenever that comes, we'll come in. And we're not just coming in as, hey, this is our money, go away. We're coming in as partners. Fund 1 was a 70 million fund, which went into 11 companies. That's a very small amount of companies compared to most people because when we're making the bet, we're making it. We're going down the road with you. And yeah, so that's what I'll say about the debt and equity. It's stuff that you would have to take time to learn by yourself. When do I need debt? When do I need equity? How can I use equity to leverage debt? Because debt rates are still ridiculous on continent. I'm probably sure he has great rates for you guys at OneLiquidity, but in most places, you get ridiculous cannibalistic rates. And just random data. If you looked at the mortgage rates in the US, they are complaining mortgage rates have gotten to 6%. I said in the US, not here. They are complaining mortgage rates have gotten to 6%. Yeah. 6% is the best mortgage you can ever get in Nigeria, and you get it once in your life. That's NHF. And that's a horrible rate in certain markets. So that's just how you should think about debt. Think about the cost of debt and what you need to achieve, also opposed to equity. And then the good thing with equity sometimes is you can bridge. So, like I said, there are limited resources. To build my business, I need 100 million. That's great. Nobody's going to give you 100 million today. That's why you start with your pre-seed and then you stagger it. And as you learn and fail, you also figure out better ways to use your capital. There are $10,000 experiments and there are $1 million experiments based on where your business is and how much capital, equity or debt you can get access to.
Okay, thank you. So I think you have one more question and that will be it. Yes.
Good afternoon, everyone. I'm Joseph. My question is like getting into a class with Yvonne and Monachi. Yeah. So now, I have a firm I'm about starting. I decided to bootstrap. We have an office. I want to get staff. I want to get people that are even better than me. How do I do it? I know I have to pay. I have zero knowledge in HR. Complete zero knowledge. And I don't have a BSc, probably in economics or anything HR. Now, my second question is for OneLiquidity. The liquidity you provide, is it in cash? Like for a business, like the Aboki guy here. He has an Aboki kind of business. So is it like, okay, he wants to run this business. He has to act like a middleman between him and some suppliers in China. And now, OneLiquidity will provide the liquidity for that so that he can just take his own cut off.
That's exactly how it is.
Okay, now, I'm about to get deep to the last one. It's personal now. Do you guys provide a virtual card platform connected to like UK and Europe and US such that the fees are lower than what is obtainable within our sphere, this Nigeria now? Yeah. Do you guys also want liquidity? Do you can you provide a physical card that works better than UBA?
We are going to we are trying to keep our questions down to like just one question.
Yeah, it's one question. It's just one question.
This is more than one question. Your one question now has
why are you spoiling my business now? Leave me.
It's physical. It's just a card question. It's a card question. Sorry. Don't worry. Okay. Virtual bank accounts, US, UK, Europe, virtual cards and physical cards, and that is all. And liquidity to help those.
Okay, okay, cool. So first of all, thank you very much. And yes, we do. So what we want to build is we want you to go and look for customers. We want you to innovate. If you have an idea, let's work on it. You understand? The liquidity, no problem. We'll handle you. But we also have safeguards, we have measures we put in place to ensure that at least we don't throw our money away. Yes, compliance, very, very important. So we always do that. So we front run a lot of businesses, and once they're integrated into us, we essentially take away the need to pre-fund, and the need to have to always be liquid. You can be a business that once you can be doing $1 million and not have $1 million. The only money you have is the money I'm making in profit, and that's fine by you. You understand? And that's how we are integrated to a lot of businesses. As regards to your virtual card and your card question, one thing that I've come to realize is regulation is a beast. You understand? And it is something that you need to figure out. And we all know what happened with Union 54. You understand? Anybody that worked in that space will understand. It's a very, very difficult game because these card schemes have created such a tight monopoly for their business. Remember, these are 100-year-old businesses. They have built their business so aggressively that it's almost very hard to do some certain things. And what they don't want you to do is be a card issuer in US and have customers in Nigeria. They want a new customer. They want everybody in these different countries to work with them. And for us, the reason why we have not rolled out, we tried it the first time. The supplier we use or the provider we use, we partnered with, they had to come down. And the new ones in the market are extremely expensive. We have explored a lot of those partnerships. But what we've come to realize is that it doesn't really meet our specifications as per quality and cost. It's not going to help you make money, and there's really nothing in it. It's just a suffer-head business if you think about it properly. So what we have been working on, the partnerships we are trying to work on are, first of all, partnerships that are sustainable, that we know that in 10 years, this thing will be working. You understand? And two, it's a business that you too can make money from. Because I'm not just interested in, if you're not making money from the business, well, there's no point of doing the business, you understand? So the current ones are not, they are good for, you try it, but you quickly realize that your customers are not happy with this. customer service and the experience, you understand? So what we are trying to work on, and the partnership we are working on for the past few months, are one that would sustain and work. As per virtual cards and virtual accounts, it's something that's going to come in maybe early Q1, because we want to work with the right partners. We want to ensure that the compliance is in place. We don't want to start a business and have to stop it. You understand? So I don't want to promise you anything, but it's coming very, very soon. And and we also want to know more about your business too. You understand? But let me let her go first.
Okay. So my short answer to you would be to leverage your social capital, leverage your network of people. One of the things that we have done in the company that I work at is when we have important roles, we depend more on referrals. So speak to people you know, speak to HR people you know, people who have built companies, people who have employed people who have had people pass through them. Have conversations, just talk to enough people, create a comprehensive job description of the kind of person that you're looking for, and then speak to your people. If the people in your inner or first level sphere of influence cannot get you like what the kind of person you're looking for, then let them speak to their own people. Just put the word out there and leverage referrals. That way, and then you can also have people who have done this before. If you have like a HR person, somebody I know that is good at HR, can sit in conversations when you're trying to pick your candidates and everything. But at this level where you cannot go to LinkedIn and find the person that has done this in XYZ companies and is looking like he's already set, and you just come and say, "Oga, how much are they paying you? 10,000, I'll give you 12,000, come, let's go." Since you can't do that, you want people who know people, who understand their work ethics, and then I would just say leverage your contacts today.
So just to add to what she said, one thing you and everybody should know is that there's no skill that you can't learn. Don't worry. There's no skill you can't learn. Anybody can learn to be a financial person if he wants to. There's nobody that was born with knowledge. We all choose to be here today because we are interested in it. And interest is what drives knowledge. The next thing is, when you hire people, make sure you're not just hiring for something that you can learn on your own, or something that you can get another person that is close to you to do. So make sure when you hire people, they have significant value to bring, not just in the knowledge space, but also can help you push your business in a way that they have the right connections. And there are certain roles that are very, very critical. For instance, business development. You need to hire somebody that has talked to people before. Because for business development, before you start, if you don't have any connection, you just be crying every day. Everybody you talk to will say, sorry, we don't know you. And especially when it comes to B2B or some form of business that needs to interact with people. So always hire for not just the skill, but also for the capital, the social capital that the person has. You understand? The connections that the person has. Those are the most important thing that you should think about. And that's why you see people like when Facebook or when like a big company wants to come into the space, they look for the person that knows the most, and they pick that person. It's not because they want to pay more. It's because they don't want to do the groundwork of teaching the person anymore. You understand? Remember, if it's a teachable thing, just teach the person and let the person grow. You understand? But if it's something that the person needs to add a little bit more value to the business, you understand? Make sure you look for somebody that already has that knowledge. And if it's going to cost you more, that's fine. I ensure that if you're paying A, the person is bringing A plus B. You understand? That is the only way you can retrieve. Remember, employees are also resources. You understand? You need to teach them, and they need to also bring value to the company. You understand? That is the only way. It's not just you paying them. They need to bring in value. They need to bring in more business as well.
Okay. Yemi, do you have anything to add?
Yeah, so I'll just layer a bit on that. And so there's this concept that people talk about. It's called founder evolution. And it's kind of like as your company grows, you have to grow, and then also the people around you grow. So at a certain point, which is probably where you are now, akin to what I said with you needing to learn about that space, you can have people that will come in, but there's a very slim chance that you would bring in someone that has worked in HR in 5 companies in senior roles and understands all the problems. So you constantly have to learn about that. Down the line, you could be able to afford to bring in people that understand it more than you. So day one, you and your co-founders, you people are the head of everything. And then you now look for the low-hanging fruit. So the things that you guys understand probably the least and you can't do anything about. And then you try to find the strongest people for those things then. And then as you grow, you're able to then bring in people for other things that you could be good at, but you're not great at. And that's a way to think about who the next person you need is. As you have an office now, and it's just to fill out the seats. And then so based on what you're great at, you'll be able to identify what these people are or who they are, and then prioritize. You can't get everyone at day one. There are companies that wanted to have a credit function. They couldn't implement that credit function until they got to their Series A or Series B or whatever, because they couldn't afford to bring those people in then, and then they didn't have that expertise. And there are also things that you can delay. So your end product, it's not going to be product one. So think about people that you require for product one, and then use the different tactics that both of them have shared towards like finding those people or towards filling those roles.
All right, thank you. So I think this brings us to the end of our conversation. I'm so sorry. If you have any other question, you can meet them. They'll still be around after now, so you can. All right, go ahead, clap. All right, thank you.
Oh, photos, please.